Hi, everyone. How's everyone doing today? Fed week. Let's have a good week. Alexander, Richard, Hugo, Chimang, how are you? Greetings from Singapore. Sinatra, LZ, Gorshi, how are you? Okay, let's take a look around here. You guys all know we have some risk off continuing today. Well, it depends what side of the market you're on, Chimang. Hello, Laura. Okay, so we're getting the smash. And a lot of people had their line in the sand on the S&Ps under this low. So I think we're challenging it right here. Okay, with the Fed coming in this week, I don't expect much more than a relief rally. And I'm not sure how they could engineer it, because if they, delay the taper, the market will be saying, well, they're delaying it, but it may still be coming. I want to take a look at the dollar here, challenging the high of the move here, up here. And I think there's a possibility this is something that may support the market if the dollar could turn. So the strongest currency, the one that's holding up the best, at least today, is Euro. So I had this black line drawn and, closed underneath it. We're under 78.6. I thought the Aussie might hold the 61.8. It's actually given up the least. Cable is right at or under the 78.6 level. So we'll see if we could get a turn in the dollar. I think that's going to be maybe the feature of the week. On the 15 minutes so far, we're getting a lower high. So I'd say that the way the market's trading and I'm only looking for a bear market bounce, maybe Euro could rally back to 119, 120. I'm still thinking that if the dollar fails here, guys, that we could still have this, where we had this. And if we had it from up here, still maybe trade down towards 91, but wrong on the move over the high of the move, 72. So thinking the dollar, at least for some type of scalp, might give up the ghost. So silver's following through to the downside. I talked about that. I thought we'd get new lows for the move on silver, while gold might be developing a right shoulder. And you could tell that the gold's still acting much better by how the gold silver ratio's up again. Not a bad looking chart, diverging a little bit. But I'm going to wait for this in the gold. If you look at the 15-minute, maybe it wasn't the 15 minute, it was 2 hour. Yeah, that's it. Okay, you see this? You have 1, you have 2. So maybe if we had one more shot down, it doesn't have to, because it diverged pretty nicely here. So of the precious metals, I'd say that if you want to trade counter trend for now, look for gold. I'm going to wait and see if we could get a third drive down here, test it one more time. And maybe something counter trend in the dollar is setting up. Well, yeah, I'd call this a pretty nice gap, DJ. So it actually gapped above a trend line, which makes it look like a breakaway gap, doesn't it? Good eye. Okay, so, I think we're going into the 30s on this. I think this is the correction that everyone's looking for. We'll see if it's just garden variety, 10%. I know that people will buy that break. We're almost, we'll be at 10% on the S&Ps right here at the 4,100 level. I think would be about 10%. So there's a 200-day moving average. So we're well under the 50. Looks like this could be a magnet. Okay, so let's see, is Steve Volge in here today? Okay, how about Ryan?
Yeah, hi Dale, you all right?
Yeah, buddy, how are you?
Yeah, not too bad, mate. Good weekend?
Yeah, you know, a lot of football, the
Yeah.
real football, you know.
The one you
The
play with
show.
your hands. I know
The
that.
one, yeah, exactly. The one you can't actually kick.
Yeah.
Yeah, you can kick. There's kicks involved in it.
I know. I actually really like American football because of the strategy involved. You know, if you don't know much about it, you don't realize. But once you get to look into it, man, there's so much like playbooks and this and that. It's, you know, respect to all these guys.
Yeah, and there are some you know, phenomenal super athletes on that field when, you know, these guys are thoroughbreds. So yeah, you know, it's always good when there's a pandemic to have football on to distract us. So
Yeah.
what's happening overseas, guys? Europe got hammered. All the bourses over there get hammered as well. DAX, etc.
Yeah, Christmas is cancelled here in the UK. Just headlines up that turkeys are going to be off because we won't have any CO2 to coal them with. So yeah, Christmas cancelled. We're all going to be sitting by fires in the snow.
There's going to be shortages. Huh?
Yeah.
All right.
There seems to be a double whammy now, right? We're preparing for the Fed, who, in theory, are going to guide us in terms of tapering, and you know, maybe give us a rough schedule on, you know, when are they going to be hiking and all that. But this is one, and then you have the China situation, which is pretty huge. And if they, you know, I was reading today, you know, if the authorities there don't manage to somehow contain it, I mean, this is going to be the biggest default in history, right? And it's not going to leave other markets untouched. So basically, we're seeing everything just go. Interestingly, metals, you said before, they're trading quite well, and I think maybe one aspect to that is that you're seeing cryptos being down 10%. Well, maybe we're reversing some of these flows that were out of metals and into cryptos. I don't know. I mean, I'm speculating, but it could be. If you told me that stocks are going to be down 1.5-2%, I would have told you, you know, gold is down 2%, silver is down 5%, but they're unchanged. So
and the gold still, we're getting that, you know, like I talked about, a potential right shoulder here. See this and here, and then this flash crash was the head, and you got a nice neckline here. So, you know, between the two, gold's really acting okay. And you know, I like it here. And silver, you know, it's starting to diverge here, and I think I saw a 2 drive on it. Yeah, you have 1, you have 2, maybe one more low, but the golden fates of everything on, you know, a real ugly board is acting okay.
Yeah, I agree. I think it's going to. Sorry, Ryan. I was just going to say we have these 2 binary events now. We have the Fed, which, you know, the more markets are trading like this and they're going lower, you know, the Fed theoretically shouldn't be paying that much attention to it, but it will. So I think the risk is for the Fed to be more dovish than expected, and the Fed, I think, will always err on the side of dovishness. They kind of have to. And you also then have the China situation, which from one day to the next, you know, we might get a headline saying, you know, this plan has been put into place and they're going to try and contain it. Then suddenly markets are going to be happy again. So it's going to be volatile, and it's very risky, whatever you're doing, you know. Anyway, sorry, Ryan, you're going to say, and I interrupted.
That's right. I'm going to disagree with you slightly on this China stuff. You know, we've been looking at it in a bit of detail this morning in the chat room, and I think it's not as fearful as the market's making out, especially to Western markets. I mean, the biggest exposure to Evergrande dollar bonds is Ashmore Group at 400 odd million, BlackRock at 385 million, UBS at I think 270 or something. These are not big numbers for Western markets, you know, and the fact that Chinese banks, according to the stories last year, have been adjusting their risk on this last year, says that China are going to have it contained. Yeah, there's going to be some pain for their suppliers, because they are a property group who build properties. So, paying their bills might be a problem. But the rest of it is going to be managed and smoothed out. And there might be a few ruffles in China, but I can't see there being any contagion across Western markets in real terms. Yeah, we might get the headlines saying, and like we said today, part of that is China. Part of the risk-off move is China. But this is a case where the market's getting all jumpy over something it doesn't perhaps need to get as jumpy about.
I think maybe not in terms of actual holdings, overseas holdings of this company and default that's gonna potentially come. I think it's more the market's psychology and a domino effect. You have this one index collapsing. Well, it's going to take another one and another one. You remember, subprime was not the same, but it was similar in a way that people were saying, look, subprime mortgages have a tiny portion, and why should it be? Well, everything just went.
Yeah, so even Bernanke said it was contained.
Yeah, I agree with you, Ryan. I think theoretically it shouldn't be a huge issue, but you know how psychology works and how markets kind of get in a domino effect. And that's what I fear, especially now that we're at these valuation levels in pretty much everything, which is ridiculous. Any bond, pick any bond, the yield is just stupid. So,
I agree.
Yeah. So, that's my view. I agree with you in principle, but in practice, it might be a little bit more violent than.
But haven't we spent the last 10, 12 years fixing all the books against blow-ups like this? I mean, Lehman's brought the whole thing to a head and changed all the regulations all the way through, so that banks and institutions weren't over-leveraged on these kinds of things.
Well, what was the name
what they spent the last 12 years doing?
Yeah. What was the name of the brokerage firm that was also very big and had been around forever before Lehman? There was one failure before Lehman that wasn't as big.
Bear Stearns or Bear Stearns? Bear Stearns?
Bear Stearns, was that it? Yeah. So it may have been, because someone's comparing what's happening in China not to Lehman, but the first failure that we had over here.
Yeah, that was Bear Stearns. Yeah.
Okay. Yeah. Bitcoin looks like 30,000 is a possibility here. Just looking, all these alarms are going off, just this move, and we're on the verge of, taking out the El Salvador low. Isn't that the El Salvador low? Right?
Yeah.
Anyway, so Ethereum also looking heavy, just as weak. So kind of a liquidity event here, and gold's the only thing performing.
Well, that's weird. Crypto's down and gold is up. Whoa.
Yeah, didn't Jim Welsh Blake say that he noticed that there were, opposite flows between gold and crypto?
I'm sorry. I'm going to have to say I've been talking about this for months now.
You have been too.
I have to give it to you, Blake. You were talking about it first. Yes.
I'll tell you who talked about it first.
Who?
My 14-year-old kid. That's who talked about it first. Is when I had a conversation with him 6 months ago, whatever. You guys, some of you remember listening to the webinar when we were talking about it. I was like, why are you buying crypto anyway? Why? He's like, and then we were talking, and he's like, why would I buy gold? He goes, what you got it sitting in your safe. Why? Like, what? Why? I don't need that. I have it a wallet. I have a wallet.
Why not have it in a wallet where you can forget the password, or it can actually fail and you lose it forever?
It doesn't matter. It's his attitude. But that's like that's when it rang the bell for me. I was like, these kids don't want to own gold. They don't want to own, and it's and he is representative of that generation. And I mean, this is actually, I had a conversation with both my kids, my teenagers. And, but anyway, but we are seeing that divergence between the two, precious, you got, cryptos down at really key support. And then, obviously, precious metals are bouncing, but guys, I'm going to say this, there's no like news. This is all preemptive and I believe technical, that you're seeing in the market. This isn't like there's some headline that's driving this right now. It's just, the market's still
Doesn't that
moving,
make it more bearish?
I mean, I think that we had a technical breakdown over the weekend, and it was very clear, that we closed, and I pointed it out during the week ahead video.
Nice pip you have on short S&Ps, Blake.
Oh, thanks. But all I did is I just moved the stop. But I did take profits in the dollar Mexican peso this morning. Actually, I took them last night. If you guys are long the dollar Canadian and the dollar Mexican peso with me over the weekend, I took profits actually last night. You know how tough it is. It's a Sunday night, and it's Asian trade. The market's just open. I know. How many times have you been in trades during Asia and then you wake up? Well, for me, and this is obviously different for those of you that are in Europe. You're in trades in Asia. You're in nice, healthy profits. You get up in North America after Europe just reversed everything, right?
Right.
And I was fearful of that. I was like, I better just pull profits now. It was a really tough choice last night because I knew that the S&P actually broke through support and we closed below the 618 on Friday. I figured there was going to be some follow through. So in Asia, there was some follow through. We're at the 78% retracement last night. And I'm like, man, I don't know if I want to be, short risk. So I pulled dollar Canadian at 128. I took it off at 128 from being long over the weekend. And I took my dollar Mexican peso off at 2012 right here. Because I just didn't want to wake up, giving back all those profits, which I'm sure you guys can, those of you that are not in Europe. I mean, because in Europe, you guys and gals are the ones that turn it around on us. So you guys are always the ones laughing. But for us that are, actually have to sleep, getting up in the morning. I know Ryan's over there giggling right now. Yeah. For those of us that actually have to sleep, we get up and we're like, damn it, you turned everything around, but there's nothing you can really do about it. But anyway,
go broke taking profits, Blake.
No, but I get up being a little irritated too. But one thing that I want to point out is, we are seeing, this move is not on any specific headline as of right now. And Dale, you said it. Does that make it more bearish? I think the market is, sniffing out something, whether this Evergrande thing comes to fruition. I think, we just had a really good conversation. Ryan pointed out, there's not a lot of exposure for North American exposure. Is it going to be very disruptive to the markets? But Stelios also made a really good point. It's psychology too. If one domino falls, the other one can, other dominoes can fall as well. And especially when you have markets at such elevated levels. And that's what I talked about over the weekend on the week ahead video, is that, we've been moving up for so many years. This is not like, I'd felt we were a little top heavy pre-COVID, going into the end of 2019. I was like, this megaphone pattern, we're probably at the top here. And then, we got a reversal, but that was COVID. That was like our quote unquote black swan event, right?
Yeah.
That lasted a whole whopping, 5 weeks?
Yeah,
and then
6. Yeah.
6. And then then we doubled, the markets doubled because of, obviously the Fed and every other central bank. So, what happened in 2019 or beginning of 2020, it was inevitable, in my opinion, after 10 years of easy money, monetary policy, or 9 years of easy monetary policy. That was just inevitable that was going to happen. It just happened as a black swan event because of COVID. Now markets are, responding to the massive central bank, loose policy over the last year. And that's what we've got is what we've got. And I do think the markets are probably going to start to pull back now that we, are looking to, normalize monetary policy. But stocks are, taking notice right up here, because will Evergrande be, another black swan event? I don't think so, because everybody already knows about it, and it's going to be, you got the Ryans of the world out there going, yeah, it's not very much exposure. And then you got other people saying, well, this might be a good idea to take some profits because it's, psychologically going to wear, so obviously it's creating a little bit of an event where, you are starting to see some profit taking. And I think markets will naturally start to give some back, probably in the next 6 to 12 months is central banks try to normalize policy and taper bond purchases and possibly raise rates in certain circumstances. So you probably will get, the S&P moving lower towards 4,000 over the course of the next, several months. So anyway, that's
several days, maybe.
Well, yeah, the way things are happening right now, it could be several days.
Look at that gap, Blake, on the VIX. I mean, I wouldn't be short volatility now.
Huh? Yeah, I mean, you wouldn't be short volatility. Yeah, I mean, look, volatility, we could probably reach a little higher, but yeah, I mean, you look at it, and we're probably, I would assume that they're gonna sell volatility as soon as they get in. Soon as they
you mean?
No. As soon as we open up the North American markets, they're gonna lay into volatility. That'd be my assumption here. Let's take a real quick look around at like some of these currencies that are moving. And let's stop here for a second. I'm going to talk about the S&P. So we were during the week ahead video, I said, hey, we're going to probably get down to 4380 to 4400. Well, obviously we've overshot. We're at 4350. This is a lot of support down here. This, I think you can probably, call this the support zone, somewhere in this neighborhood, right? We're here. And I think this is going to be very pivotal going into the Fed. And as we, think about what's happening with the Fed going into this week. And I have to also note Evergrande's next interest payment is on the 23rd. So that's what, on Thursday? Is that Thursday? Yeah, it's going to be Thursday. So we have an Evergrande interest payment on the 23rd. Maybe the Fed might say, what's happening in China? Maybe they, the Fed chairman, references. What would happen, Ryan Stelios, if you heard the Fed chairman be a little dovish because of what's happening in Asia? I mean, he's no way he's going to mention it. I don't think.
Buy everything. Literally.
I mean, yeah, literally, we would be at all-time highs. Like,
Well, he's got record in doing that because they mentioned Brexit a lot.
They did, yes.
That was all going through. And really, America wasn't really getting affected by Brexit, but they threw it into the statement and the comments. Oh, yes, global issues, Brexit, blah, blah, blah. So, yeah, I expect he'll throw it in. If not, he'll get a question on it. And they'll know how much exposure the US has got, banks have got to that. And as I said, as we saw from the numbers I cited earlier, BlackRock, 385 million, that's not going to get them worried. Yes, as I fully agree what Sturz says about, market sentiment and psychology and catching on. So yeah, I reckon it will come up in questions at the very least. Whether they put it in the statement or not, I don't know, or just keep it broad.
Yeah, I was going to say, I doubt that it's going to be put in the statement, but I'm sure that questions are going to be asked. And, if you're the Fed and you're like, if you're just kind of doing the Ryan thing, and I say the Ryan thing, quote unquote, the Ryan thing, but you're looking around and you're saying, okay, well, how much exposure do we really have? And is it really going to affect our markets a whole lot? It's probably not going to affect us, but it could, going the Stelios route, could affect, psychology. We're already seeing equity markets look a little, markets are looking a little, eggshellish walking on eggshells around here a little bit. So maybe we need to just approach the statement with a little bit more dovish stance. And why not? You know, there's no real reason for us not to at this point in time. We're still going to taper at the end of the year, and you know, in November. But we can wait a month to really, you know, make it an announcement. We can just kind of, you know, be a little bit more dovish right now. I mean, there's I think while we're all waiting to see what happens with Evergrande, it's like, if you're the Fed, what reason do you have to be hawkish right now, right?
Yeah, I should explain also the reason why I may sound a bit blasé about Evergrande is not because I think it's a nothing. I like to measure what's actually happening against what the news is saying, what the headlines are saying, what the market sentiment is. Because if the market is going far too fearful over Evergrande compared to what the actual situation is, if you do a bit of research, for me, there's a trade opportunity there. Because if stocks dump and it's all Evergrande, well, I'm going to be a buyer because I don't think it's a big deal. And that's my reason why I'm perhaps talking a bit blasé about Evergrande, because I'm looking for the trade. And one thing I love trading is sentiment, market sentiment, if it's wrong.
But, you know, at the same time, aren't you just wanting, are you a little upset that, you know, Thanksgiving might be canceled, or Christmas might be canceled? You know, I mean, is that the whole reasoning here? I'm just joking.
I live by the sea. If I don't get turkey, I'll go and shoot myself some fish.
I heard you talking. I like, oh man, I saw the sarcasm hat get thrown on this morning. That's great.
There's plenty of coal around to give for gifts.
Right, by the way, cryptos are going even lower now. Ethereum broke past below 3,000 and dropping.
I've got Ethereum on the screen right now, Stelios, since you must be looking at your toes right now.
I was
not
actually
at the screen. So if you look at Ethereum, we actually just broke below 3,000, as Stelios was pointing out. And we're approaching some pretty horizontal support. And this is really pretty key. I mean, if you look at Bitcoin, 43,000, and we've been noting this on, you know, on our, you know, private webinars too, for the ForexAnalytix subscribers, but talking about like the bull bear lines right here, you know, you can see them both being breached this morning on Ethereum and Bitcoin. You know, Bitcoin also is right here at this 43,000 levels. So these are really important support levels. And, you know, just because you're hitting a really important support doesn't mean it's, you know, that's it. It's done. You know, stick a fork in it. It's just, you know, support and resistance is, I try to explain to everybody and have over the last 20 some odd years. It's not an exact science. If it was, we would all be gazillionaires if it was an exact science. It's not. You know, support and resistance is a zone, and you know we're in that zone here. So you got to think, you know, Bitcoin's some pretty you know, big levels that make it vulnerable if we start getting a sustained break below, you know, let's just call it 42.5. You know, we start breaking below here, you know, and we stay below it. That's pretty bearish for the crypto space. And same with Ethereum. You know, we start breaking below, like, let's call like 29.5, you know, this breakout point, all this previous support, we start getting down here and staying down here. That's when you have to start looking at the crypto space saying, you know, hey, is this where Bitcoin really starts to look at, you know, 25,000
liquidity.
Again? Yeah.
It's like a liquidity event, don't you think?
Well, you know, I mean, how big is the exposure right now? You know, to crypto. I mean, the whole crypto space is what, 10% of precious metals right now. So it's pretty big, but it's not. You know, it's. I don't know if it's. You know, I think you'd see a lot of institutions might have some exposure out there, but I don't know to what extent.
Well, you know, sometimes you sell your winners when other things are. You know, it's not the right thing to do, but. Well, I've done it, you know, to sell your winners to raise cash because you're getting clobbered somewhere else, like in equities, and you own crypto, you might be selling some.
Yeah, I think that goes back to what Stelios was saying too. It's more the psychology aspect of it, like liquidity to a certain extent, but even more of, hey, you know what? Yeah, we've gone pretty far here. I'm going to book some profits in. I'm going to book some profits here to offset, my crypto losses, that type of thing. Yeah, I think that could definitely start that type of move. Anyway, hey, I know I just looked at the time. It's actually the time
Flies.
It
Flies when
does
you're
fly
having a
in the morning.
crash.
Yeah, Stelios. I don't even know if Steve is here, but we've kind of been excluding him because I know his son's. It's more getting the kids back and forth between school. It's this time of day. But Ryan, Stelios, any other comments before we turn it over to Dale and his interview?
No, I'll leave it to Dale.
Yeah, no, not from me either. I've said what I want to say. Yeah.
Okay, let's all hope that Ryan gets a Christmas this year. That's what I'm looking. I'm actually gonna start a GoFundMe page so Ryan does not miss Christmas from here on.
For Ryan, it's Christmas every day.
Christmas. Just quickly, I saw a Bloomberg article this morning in Germany. Big business is butchers' vending machines. So you go up to a vending machine, all your turkey and your meat and everything, because they get for the virus when people couldn't go in shops. It's a big thing now over there. So I'll just take a trip to Turkey.
Does it accept Bitcoin to buy the turkey?
Not the way it's dropping.
Not today.
Deutschmark.
I love the Deutschmark. Bring it back. All right.
All right, guys. Hey, just a quick shout out to our sponsor, Forest Park FX. If you guys haven't figured out, that I actually just got a check on Friday. I love getting these once a month. I get this check in the mail and I'm like, ooh, look at that. You get cash back rebates, or you can learn how to get ForexAnalytix for free. Make sure you visit Forest Park FX. Remember, since I spent the last 5 years trading with JP Morgan, this is over the last 6 months, I'm, back to trading retail or just a regular trading account, and this is the first time I've ever gotten cash back rebates on my trades. It's really cool. So I use this as well. So
just don't get carried away with it, guys, and churn your account so you can have a bigger rebate check.
Right. I've thought about that. I'm like, I don't care. I'll just kind of whip around a little bit. Anyway,
well, we were both brokers, Blake. We know what that's about.
Right. Well, yes, actually, that's just true. We used to definitely encourage our day traders.
Sounds good. Let's do it.
Yeah, let's churn away. Anyway, no, but get a hold of them. Their information is right here. You can talk to them directly on Skype or this email right here. And remember, they're here to help you. They're like the concierge of brokers, and they really will just kind of look at you and see what you do typically and find out what broker is best for you. And they're the ones that make sure that this webinar can happen every day. All right, guys. Thanks for joining us. Dale, have a great interview. And I hope I'll see the rest of you guys and gals in 45 minutes on the morning edge for ForexAnalytix subscribers. I'll see you guys there.
I'd like to welcome Fox Business contributor Gary Kalpam to our community. Welcome back, Gary.
You got me?
Got you, Gary. How are you?
I am excellent. How's your morning?
It's if you were bearish, you're enjoying it. If you were the other way, you're wondering why. Everyone's trying to attribute it. You want to share your screen, Gary? Because you and I'm thinking about it. You and I have been there, had some interviews where maybe we, and we were a little negative, and we got like a 3 to 5% correction.
Right.
And then it came back, and everyone started calling me the boy who cried wolf, even though, worked for a while. This seems a little different this time, doesn't it to you?
Yeah. By the way, I'm trying to share screen. It says you cannot share screen while the other participant is sharing, whatever that means.
Okay. So there you go. Now you can.
All right. So first off, you mentioned the thing about, but the market came back. The big indices came back, but what I do, I have a radio show.
Still waiting for a screen share, Gary. You have to click it.
Hold on. Screen
have a
share. Share
green box.
screen.
Yeah.
Share.
Yeah, so you're going to get to the underlying weakness of breadth and everything before the
Yeah.
sell-off began.
Yeah, well, you know, when I every night I scan 1,500 to 2,000 names, 200 sectors, every country, every commodity, and just every day on my radio show, I would say S&P's fine, Nasdaq's fine, Nasdaq 100 is fine, small caps are underperforming, but, and then I would show, let's see if I can get this up here. Hold on. Then I would show Union Pacific. Then I would, and therein lies my point, where just I can show Cheesecake Factory, and I can show FedEx, I can show Caterpillar, and just every day I would just rifle off this list: economically sensitive, transports, industrials, drug stocks, rails, truckers, MasterCard and Visa, a bunch of retail, restaurants, dish drives. So underneath the surface, and I didn't know how bad it was until I guess this Morgan Stanley guy came out this week and said since May, in the Russell 2000, it was like 90% of the stocks have dropped 10% or more, and 55% of them have dropped 20% or more. So what's happening today, I know there's this thing going on with Evergrande. But as I always state, you can only weaken or top, for now, a market that was already weak. Narrow markets are easier to sell off because there's less strength underneath the surface, and there's so much of this Microsoft that is going to hold things up. And little by little, piece by piece,
all the fangs, and they're starting to roll over now too. Facebook looks ugly. Yeah.
Last week, Apple breaks the 50, and for your people's information, every dollar on Apple is $16 billion of market cap. They have 16 billion shares, which is an amazing story by itself. But just last week, they started getting things that they weren't getting before. And I had no idea we'd walk into today. There's no way of knowing, but underneath the surface, the S&P they were coming after and finally breaking the 50. And just, I had a big piece in Facebook and I sold it on this day and I got pissed off because they reversed it on Wednesday. And I'm thinking, oh, they're going to rally this thing up. And it looks like they're not. I owned Apple, I owned Facebook, I owned Google because of how strong they are. Now Google's breaking the 21 head for the 50. So the bigger indices are now under pressure while so many already were. So I don't know.
So it's kind of like that expression, Gary, that when the troops retreat, and we have different generals, it's a different army here in 2021 than it was, in 2008, the generals get slaughtered. And the government's going to play a role, I think, in some of the fangs. They're talking about Instagram causing depression in girls because all the other girls on Instagram have perfect bodies, and that Facebook knew about it but continued with it. There's been talk, antitrust talk about the big tech firms. Do you think that they're going to actually create a debacle by trying to break up all these big tech firms, Google?
Well, you're going to hear certain politicians, I'll leave the names out this morning, on a daily basis go after them. There's one out there, I'm sure you know who she is, goes after the big banks every day. And
her. And
unfortunately, there's a president of the United States that last week basically, and you can correct me if I'm wrong, told the world that wealthy people are cheating the system. He came out and said that on taxes and all that, everybody, and he pretty much said that. I'm like, wait a minute, did he just say that? So there is an assault on wealth and success. I don't want to get political, but leave no doubt it's mentioned.
We know what channel you're on. We know what
Well, it's
you.
nothing to do with the channel that I'm on. It's my
Oh,
belief.
okay.
Before
all
I
right.
was on the channel or after,
Yeah.
I just I just listen and watch what people do and say. And
Yeah.
on a daily basis, there is an assault, and that's that. But back on markets, every day. Here's economically sensitive stuff that topped out in April. Parker Hannafin, things like that, and some of them just topped out recently, like Sealed Air. And just remember the infrastructure bill and MLM breaking out. Well, now it's cracking badly. The transport. So underneath the surface, it was already weak. We weakened more here. We're not going to get any tapering because Jay Powell, since Christmas of 18, every time markets got in trouble, he had either Bullard come out with easier rhetoric or did easier rhetoric, leading till to October of 19. Before the pandemic, he started printing money. So taper is off the table. Maybe they threaten it, but markets are going down. So that's the end of that.
Do you have a feel for magnitude of this sell-off? Is it going to be a quick thing or drawn out, or I actually think it could last until April?
I've been one that have been saying the next bear market's going to be a monster. That when it hits, and the reason is that the expectation of the markets it's always going to be saved by Powell and Lagarde and the rest of them. And you add the other two things up, massive leverage and very, very high valuations. And when all those things meet, you get real bigger bear markets. I'm not sure we're there yet, but the ingredients are there in that we're going to, notwithstanding a big reversal today, which by the way can happen, notwithstanding that, we're going lower. To what extent, I'm not sure. If this is the start of a big one, a bearish thing, I think it can be bigger than normal because I've shown the chart of the margin that is skyrocketed. And that's got to come off first. And again,
we have margin debt at record highs, Gary, going into this.
It has just absolutely skyrocketed. I think
you have a visual on it.
Yeah, I'm
while you're pulling it up, Gary, I want to get your reaction to this. That this infrastructure bill is kind of tied up right now. It doesn't look like it can happen.
Yeah.
And is it possible that engineering a 30% correction in the stock market might change the sentiment of some people, some congressmen and senators, to be more in favor of an infrastructure spend and a compromise than if the market was just kept going and doing okay?
Well,
could it be engineered? Could this be engineered to get the infrastructure spending through?
Well, I'm a cynic, big time when it comes to politicians, but I don't know if this is engineered because this is, the topping out process near term has been going on for a while. But anything's possible with these people. But I don't know if they have that much power. And I do believe that Jay Powell knows the one thing that can't happen is we lose the wealth effect. Because that I think has been a big part of the economy that is just laden with debt, and so I'm not there. And by the way, I'm showing the picture of margin. That is late inning type action, that type of move in margin.
That was in May.
Yeah, in the last few months, and notwithstanding massive amounts of IPOs, with most of them losing money. Secondary offerings, I think there's been 700 or 800 of them over the last year to 14 months. There's just a lot of ingredients just to watch out for. And by the way, I say this, the other part of what I've been saying on the radio was, hey, Datadog looks great. Workday just gapped up on earnings. Watch that. Tesla looks like it's setting up to go higher. So there have been, a decent amount of stocks in somewhat growth land that have looked great. I don't know what happens today with them, and we'll be watching them closely, but you got NVIDIA and ServiceNow and Integris and Datadog. I've got a pretty darn good list. Upstart, which has been a moonshot, UPST, which don't buy it here, it's too extended. So there's been good stuff out there. It's just been very few and far between and very narrow. And the narrowness may be coming back to home here. And, we'll see. I'm open to anything happening, but leave no doubt the big indices are going to break the 50-day, and that's not good news. And we'll take it from there.
So is the 200-day the next logical stop around 4,100, like a magnet?
I think there's that chance, and the important part is transports are already there. There's things that are already there. The FXI, the China, has been just, you got the death cross back in May for the FXI. The emerging markets look, terrible. I noticed Brazil, I'm putting up, terrible. And just in the last week, the utilities look like they've topped out. And then names that were acting great for a while. Look, here's Otis Elevator, which again,
elevator down.
Yeah, we're a big believer right up the 50-day, and if you finally break it, that's troublesome. There's been a lot of stocks that look like Otis now that were acting just fine and just cracked. So we're in a moment of time. It's September. I'm not in this camp that, don't worry and everything's going to turn. I'll let the market decide. All we can tell you right now, there's some issues. And by the way,
one of the only instruments up today performing, which got hammered last week, is gold. You see anything in the miners where they may be a decent hedge during this time frame?
I would have thought that a while ago. I really do believe that the crypto has gotten the gold mining people. I really do believe, because with some of the things that have happened, I would have thought gold and gold miners would be a lot higher. So I think there's a component of that. To what extent, I don't know. It's just a guess. But gold and gold stocks have been in a bear phase, bear market, whatever you want to call it. And, you respect it, and you just wait till it.
How about bonds, Gary? There was no flight to quality Friday. I think there may be some today. Are people going to hide out in the bond market here?
You would think that would be the guess. You would think, and it's set up to for the TLT to go this way. And if you look at the 10-year, little move down. Yeah, there's that potential. And remember, when the market gets defensive, it goes defensive. It finds defensive. So yeah, and by the way, it's just not what I'm already showing you. The other thing that woke me up here even more is like a 3M, which is not a leader, but look what they did to it right there. And Honeywell, same day. And I'm like, what's going on with these Dow stocks? So just more and more bad, less and less good. And now I was looking where the Qs are, because they've been holding up pretty darn well. So the Qs are going to open about right here, which, by the way, does not look like the end of the world. But since it's such a crowded trade, you worry that, everybody jumps off the boat at the same time. And that's something I'm going to watch closely. Just we're overdue, and we'll see where it takes us.
Let me ask you this. I know a lot of people are pointing towards Evergrande and what's happening in China.
Yeah.
But there really isn't any news that sparked this sell-off. There was, no black swan, no specific news. Are we going to have are there maybe a fiscal cliff? Do you think that they're going to raise the debt ceiling? I mean,
Of course they'll raise the debt ceiling. Are you kidding?
Will they let a few days lapse before?
Yeah, because they like pissing off the electorate and getting the politicians, be on our side, and look, we're getting closer and closer. Okay, we're voting for it. Yes. So I'm not so worried about it. But Evergrande, I think they have like 300 billion of debt. And I've always said if anything's going to come back to haunt, it is the debt that's out there.
Yeah.
And, you know, I still remember we were told by Bernanke and
Yeah, it's
Paulson
contained.
that everything's contained, don't worry. And then we find out that mortgage-backed securities were leveraged 10 to 1, 15 to 1, 20 to 1, and all hell broke loose. So they're telling us now, oh, don't worry, the banks are capitalized great, the lenders are good. And I'm saying to myself, wait a minute, the people that have taken us the 29 trillion of our debt here are telling us not to worry about debt. So that's something I'm going to be watching. I don't trust them as far as I can throw them. I equate them to my New York Giants team if they're up by 3 in the fourth quarter. So, you know, I don't trust them. And again, I just watch the market.
Yeah.
And I sold all my stocks in the last 2 weeks, except I own a couple of ETFs that have been holding up great. And we'll see what comes of it today. Hopefully we get the mother of all reversals, but I was looking at the German DAX today, which had been strong. That looks like a big top maybe. So you know, put up the umbrella and don't try to be a genius here, and recognize the average stock topped out in February when the bubbles popped, a lot of the bubbles. In May, started getting other things. And
definitely
now,
in April, a lot more in April, then a lot more in July, and now the averages are the last to go.
Yeah, that's how it works.
Yeah.
This is where you get the masses say, oh, here you go. We already knew underneath the surface. Hell, I'm not going to own 3M or Caterpillar or Deere or Cheesecake Factory or Cracker Barrel or Stanley Works or Comcast and Charter, which topped out last week. They report, oh, the Dow, S&P, NASDAQ, and all we've heard is, oh, they're down a couple of percent, no big deal. I'm saying, well, if they start playing catch up to everything, it's a big deal. So again, I don't have a real thought process how bad it gets, but we just get out of the way and let it do its bidding to whatever point it decides to and go from there. And if they decide it's the big one, we'll know, because you can't hide bear markets. And by the way, let me show you what a bear market looks like. It is the inverse ETFs. Here's your Russell.
Yeah.
Here is your inverse. If you want to know what a bear market looks like, this is the classic, how you just continue to descend below the 50-day, and every rally into the 50-day fails. Now we're going to get something like this. And if it holds, that's troublesome. The same goes for the VIX. That's been in the bear market. If it breaks above, there is your turn to the upside.
There's a 5-point gap. There's a gap higher opening of over 5 points today. So it is going to do that. Yeah.
As expected. And if it holds, bad for the market. If it doesn't, that means the market may, stiffen up. But just to show you what a bear market versus bull market looks like. And this, it doesn't look perfectly like this. Here's your
I've played in these graveyards before.
Gotcha. Here's your SH, and here is the bull market, the SPY, ascending along above the 50-day. Every pullback's contained, and here's the SH, and every rally has been rebuffed. And so this is classic stuff. I've printed these charts. I put them up on my wall for the future, and it doesn't never look that perfect. But those are two perfect ones. And now we get a change of complexion today, possibly. Powell may announce a printing of $20 trillion today and buy up the whole S&P for all we know.
Yeah.
And we'll just go from there.
Where can we hear your radio show, Gary?
We post it at GaryK.com every day.
Okay.
And what we do is we mix the bad people, Washington, with the markets. But the mainstay is the markets. We have this service also where we do webcast after webcast showing all this.
Okay.
And last week took us out of all our stocks. Why? Because the market took us out. And now we're going to see what happens. And we may be in short sale city for a while as things crack, and we'll go from there. Just take your time here. Don't keep your emotions in check. That's so important. Pay very little attention to what everybody's telling you, because Wall Street is famous for the following words: don't worry, everything's okay. The market's cheap. It's a value. If you loved it up there, you doubly love it down here.
Maybe we need Charles Schwab to come out and say, relax.
Yeah, just
remember that? Just
Oh, yeah.
relax.
What I just say is let price and the market action be your guide. Wall Street has a huge agenda, and that's to keep you in at all times, thinking long term, never telling you that Citigroup is still down 90% from the highs of '08, and many have gone by the wayside. So just we'll take it as it comes. And look, I like markets going up. Let's hope it gets defended, and I'm all for it. But at the open today, it's,
What a great day to have a pro like you on, Gary.
Well,
Someone who's seen this before, who's seen both, bull and bear markets in their career, and some very good advice and rational things to do in an irrational world. So really,
we've studied bear markets 10 times more than we've studied bull markets, because if you're one of the few that can stay out of the bear, you are just so way ahead of the game. And in a market this year that has a bunch of Eiffel Tower tops, caused by bubbles like a CARV or a TLRY, where people are buying in here and people are yelling and screaming about it up there, and then getting there, what's beat. It's just very important to keep your wits about you, especially if this continues. And just so many areas have been under pressure, and now we'll see if the bigger indices, which have been masked by money flows into the big names, we're going to see whether they have any defense in them or not. And
we'll see how the passive investor, if they remain passive. And one thing to keep in mind, in nature, bears do not go into hibernation until winter. So they have a couple of months to, go steal some picnic baskets at Yosemite. So, Gary, thank you so much for being with us today, and really great to hear your views, and giving, there's wisdom in experience and years of doing it, and you definitely have it, Gary. Really glad that you came here to share your views today.
I thank you. We're just trying to put our best foot forward daily, and appreciate what you guys do. You're very, very big help to the masses.
Yeah, well, and you know what? You're also my trading warrior brother. So I hope that every trade you touch till we get back together again works or doesn't hurt you. Okay?
I'm with you, buddy. You take care.
All right. Gary Kaltman, and you could follow Gary on Twitter at Gary Kaltbaum. That's his Twitter handle, and we'll see everyone tomorrow for Turnaround Tuesday. You could join the team in 17 minutes for the Morning Edge, and I'll see you tomorrow. Adios. Oh yeah, one more thing. Don't just count declining issues, count your blessings, and I'll see you tomorrow.